Hi viewers, you're welcome to my banking tip series. Today we are discussing the bank statement, also referred to as account statements. A bank statement is a great tool to help you keep track of your money at the bank. It can help you track your finances, identify errors, detect frauds, and even show your spending habits. As a tool, you need to be skilled on how to use it for effective results. It is your duty and responsibility as an account holder to verify your bank account on a regular basis, either daily, weekly, or monthly, to ensure your records match the bank's records. This helps you reduce incidents of errors, frauds, and even excess and irregular bank charges on your account. In this video, I will show you the structure and contents of a bank statement towards a deeper understanding and appreciation of this great tool. This will be followed by another video where I will show you valuable tips on how to read, examine, interpret, and even query your bank statement for infractions. Alright, you're welcome to the channel. What is a bank statement? A bank statement is a record or report of all financial transactions that took place in a customer's account within a specified period of time. Some of the items shown include deposits, withdrawals, charges, opening and closing balances, among others. Account holders are generally expected to review their bank statements periodically to help keep track of inflows and outflows, monitor for unauthorized transactions or mistakes, if any. By structure of a bank statement, we refer to the essential components of that report. Three integral parts of a bank statement can clearly be identified, namely 1. General information section, 2. Financial information section, 3. Footnotes or bank's call to action. General information refers to those unique features associated with the account, customer, and bank that distinguishes one customer's account statement from the other within a particular bank and even across the various banks in Nigeria. One of these unique features, for instance, is the account number. Recall that in August 2010, CBN directed all banks in Nigeria to adopt the 10-digit account numbering system. Before then, each bank adopted their account numbering systems. Some had 11 digits, others had 12, 13, and so on. By the way, what does NUBAN mean? It means Nigerian Uniform Bank Account Number. With this system, you are not likely to see two or more customers sharing an account number within the same bank. Apart from all the general information which has been crafted to ensure that each account is unique as much as possible, banks also take steps to uniquely identify the customers operating the accounts. To open an account, banks will typically ask potential customers to provide the following items, among others: government-issued identity card such as national identity card, permanent voters card, driver's license, international passport, or social security number in some countries. 2. Passport photograph. 3. Bank verification number. 4. Phone number. 5. The bank would also require the potential customers to complete and execute the account opening form, which contains essentially the service agreement between customer and bank. All these pieces of information provided by a prospective customer are imputed into the banking software from which a unique customer ID is generated by the bank. In this way, all bank statements are clearly linked to their respective customers. Hi viewers, that's the end of the general information section of the account statement. But before we go into the financial information part, let me share a personal experience with you. Before I became a banker, I used to think that everyone who worked in the bank must have read or studied banking and finance. When I ultimately became a banker, I was surprised to note that most of the bankers did not study banking and finance, but other disciplines such as geography, biology, chemistry, physics, zoology, animal and veterinary sciences, plants, English language, poultry, fisheries, name it. What the bank did was to organize induction training for all the new intakes. After some time, all of them understood the banking system and turned out fine in the performance of their duties. So I realized that once you have interest to know a particular thing, your mind is already predisposed to knowing it, irrespective of your background. Now back to the channel. I know that everyone is not an accountant, banker, financial consultant, or professional, but on my own part, I will do my best to break down the content of every topic to its simplest form to ensure that you understand it and apply it to improve the management of your financial resources, irrespective of your background or what you studied. Therefore, the content in this channel is well planned such that a deeper understanding of one topic might be linked to an earlier topic that was shown on the channel. So you need to be abreast with every video that comes out from this channel. Now I ask you to do just one thing for me. Look at the bottom right of your screen and you will see one icon in blue and red. It's the subscribe button. Please click it to subscribe to this channel so that you'll be notified once a new video is released and you won't miss a thing. Have you done it? Thanks and God bless. Alright, you're welcome to the financial information section of the bank statement. All the money that the bank received into the account and those she paid out within a specified period of time are shown under the financial information section. Let me do a summary of this section and you can understand it this way. Every transaction here is either a deposit or a withdrawal. The deposit or withdrawal occurred on a specific date and carried a description of the depositor or details of the beneficiary in the case of a withdrawal. Let's now take each of the sections. Tran date means transaction date. It is the date in which the bank processed a particular transaction into the account. Some banks call it entry date, posting date, or create date. They all mean the same thing. Value date. A value date refers to some future point in time at which the value of a transaction becomes effective. It is the date in which funds which were earlier credited to an account becomes available for withdrawal. When a check is validated, for instance, it becomes part of the uncleared balance, but when it clears, it forms part of the available balance for withdrawal, what some banks refer to as effective available amount. Value date arises when the bank is not able to give instant access to withdrawal to a check that is not originated from that bank. The check is coming from another bank and they don't have access to the database of that other bank. So they need to send that check to the originating bank to be able to determine the value. And when the value is determined, the check is settled. The proceed is now dropped on the account. If the bank checks and discovers that the check was encumbered or that the check has no funds in that bank, the bank is supposed to return the check within the time frame covered by the value date. Reference number refers to the instrument details that was used in making a withdrawal from the account. If this was a check, for instance, then the check number would be shown under this column. Debit. Debit refers to withdrawal from the account. Some banks also refer to it as payout or outflow. Credit. Credit refers to deposits into the account. Some banks also refer to it as inflow, lodgement, or pay-in. They all mean the same thing. Balance. Balance shows the value of what remains on the account after each deposit or withdrawal. All the above details are shown in columnar format for ease of presentation and review. Transaction description. As the name implies, this is a narration that accompanies every transaction. It will reveal at a glance the beneficiary of a payment or depositor of funds. It could also show the purpose for which a particular transaction was made on the account. Footnotes or bank's call to action. Most account holders do not pay attention to this section, and some may not even realize it exists. The bank is the custodian of your money. At the end of the month, she sends you a report and says, "Please look at the account I have kept for you and confirm if everything is okay." When the bank sends you your account statement, what do you do with it? Do you even open the email? Talk less of going through the transactions? If you do, kudos, keep it up. But if you don't, please improve on it. It's your responsibility. Let me read two footnotes from two banks. This footnote is shown at the end of the bank statement. You will see the footnote that comes from your bank. Number 1. Please report any discrepancies in this statement within 15 days of receipt. Failure to do so implies that the statement is correct. For inquiries, report and complaints, call so number. Number 2. The statement will be considered correct unless advice to the contrary is received within 10 working days from the receipt of this statement. Where there is no notice of discrepancy within the stated 10 working days, the content of the statement will be deemed accepted by the customer. I want to show you a sample bank statement so that we will be able to apply the knowledge we have gained on this video to look at the bank statement once again. Up here, you see the general information we have been talking about. And down here, we see the financial information we have been talking about. Part 3 is not shown on this sample statement because part 3 is usually displayed at the end of the statement. So I hope you have been able to learn one or two things, or at least to be able to add one or two things to what you have known already. Thanks for watching. Don't forget to subscribe and don't miss the next video where we will read and interpret the bank statement.